Welcome back to CNBC Africa's coverage of Nigeria's MPC announcement. Still with me in the studio, Bismarck Rewane, CEO of Financial Derivatives, and joining us remotely is Nnamdi Nwizu, co-managing partner at Comercio Partners. Well, there you have it, Bismarck. 400 basis points. We were all, economists, analysts, everyone was a little conservative. 225 to 300 was the highest I heard, but 400, that's quite aggressive.
We call that biting the bullet. It's aggressive, but you have to look at it in the context of 7 months, nothing. And now you have, so how much of it is to take care of what had happened? Inflation had increased by over 7.25% from July to now. So let's take care of the past and let's position ourselves for the future. The next meeting is a month away from now. So I think that this is aggressive. I think it will do the trick. I think it will do the trick.
But what do you think is a magic number that he's heading to, that the MPC is heading to?
Well, I don't know. Inflation target, first of all, he's accepted an inflation target with the framework. But more aggressive is the increase of the CRRA from 22.5
to
45%. Basically, more or less doubling it. So if you do it by range, you'll find that you've actually increased almost 20 to 25% the effective MPR. You have increased your 90-day treasury bills from around 5 to 17, right? You have increased your CRR we talked about, and then effectively you are in a high interest rate environment. What are the implications of a high interest rate environment? One, it strengthens the currency. So, and we'll come to talk about currency in a minute. It strengthens the currency. It actually, deflates the stock market, right? So the stock market bubble that was there is already more or less deflated, and you'll see that happen over the next few days. It brings some sense of sanity into what was a market that was going crazy. And so, what do I see? I see tight liquidity. I see high effective interest rates. I see an increase in the marginal propensity to save. And I see inflation going from galloping inflation to moderating inflation over time.
Over time. But he did mention that there's a structural aspect to inflation. He mentioned insecurity.
No, there's structural and there's transient. This takes care of the transient part. But the time lag between when you announce these policies and when it begins to have an impact, right, and the transmission effect in the market will be some time. In the meantime, like I said, there'll be some more pain before the gains. But we are where we are, and the real deal here is that the Nigerians, you would see an appreciation in the exchange rate.
I was going to
there's going to be a massive
short term,
appreciation.
immediate?
No, almost immediate.
Okay.
So, because let's face it, 3 months ago we had 900. There was no earthquake in Nigeria to take it from 900 to 1,900, right? So, will it go back to 900 immediately? No. But it will definitely move from the 1560, what you're talking about, or 1,600. It will go back to at least, I think in my judgment, in the next 2-3 weeks to about 1,200.
Okay, well, let's see. Let me bring in Nnamdi Nwizu. Nnamdi, thank you so much for staying with us. So just to get your initial thoughts on the outcome of the meeting, 400 basis points to 22.75%. Seeing the CRR going from 32.5% to 45%. What is your, what was going through your mind when you heard those numbers?
When I heard the MPR figure, wasn't particularly short, but the CRR was quite shocking. 5% increase will definitely take out quite a bit of the market. Obviously, what it's done is to hike the MPR, squeeze the market liquidity at the same time. I think this will make it a bit more difficult for government to borrow, and not just government, but I guess corporates. The ability to start balancing between the currency and interest rates, which one do we think will have a larger impact on markets, which will have a larger impact on the economy as a whole, is in cool, and naturally they've chosen that currency would so let interest rates
Right.
work less now and see how we can rein in the currency. So I mean, I didn't expect it to be that high in terms of the CRR, but at least hopefully they helps us get things under control, and we start to see things improving.
Right. All that thought for us, Bismarck, Nnamdi mentioned this will make borrowing for the government, obviously, corporates and businesses, especially small businesses, a lot more difficult to borrow. And it's always been that, that balancing act, to what extent you raise the MPR to the extent that it brings down inflation but doesn't exactly strangle the economy or the ability to borrow. What are your thoughts on that?
Well, you see, you can't make omelette without breaking eggs. Something has to give. The reality is that, let us look at what happened in the US. Inflation ran away all the way from 2% average all the way to 11%. There were at least almost 8 or 9 consecutive increases in the rate. Now it's down to 3.4, 3.5. In Ghana, inflation went all the way to 52, 53%. Aggressive increase in interest rates. You now see Ghanaian inflation is down to 20, maybe 29 or something percent, halved.
Yes.
We've seen that happen, that there is a strong correlation between increasing of interest rates and moderating inflation. It doesn't do it alone. It has to be reinforced with other things. So I think that there'll be a hard landing, right? But because there is a mobilization of savings and a reduction in aggregate consumption, aggregate demand, you would have the exchange rate appreciate. And since the exchange rate is the most potent factor stoking inflation, you'll find that inflation comes down. And once inflation starts declining and moderating, you follow it up with a reduction in interest rates, right? Because
short-term pain.
No, short-term pain, long-term, or short-term and long-term gain.
I wanted to get your thoughts on the statement by the CBN governor where he said we are moving to a very aggressive regulatory environment.
Well, I think that was in the context of foreign exchange market.
Yes.
So let me say that he thinks he can sanitize the market. If there's enough supply, if it is transparent, and I believe that there's going to be an auctioning system. Once that is there, they need to come down with a heavy hammer on on Nigerian activities. It won't be necessary. So I think it was a signal to those who are gaming the system, but by and large, the gaming of the system is not the main reason why the currency fell. The currency fell precipitously because there was a lack of supply, there was an opaque system, and there was a perception that the regulators and policymakers were confused. Now that there's some clarity as to where they're going, that they can see their way,
right,
then I think that the market will actually reward them for this. So I'm looking forward to the parallel market actually appreciating in the near term, and I'm looking forward to an increase in the level of national savings and productivity.
Right, and let me come back to you. Bismarck was saying earlier about the impact of the interest rate hike, the CRRA, and especially on the dollar. He's projecting the dollar to come down to somewhere around 1,200 to the greenback. That's the naira to the greenback. But what are your thoughts in terms of how this, perhaps immediately or at least in the short term, in the next couple of weeks, how this impacts on the dollar?
Well, I think we will, and if you combine that with what they're doing, if we look at the BDCs, we saw a circular come out. They resumed sales of USD to the BDCs. I think about $20,000. I'm not sure how many times a week, but at 1,003 for starters. So what I would do is it will help the retail demand that comes along that has been pushing up the power market. Because what you've seen has been power market moves, and official market tries to chase to catch up with it. If they can supply and at the same time, hike and make it more difficult for people to hold the dollars, right? And also make it more attractive for it to be in naira. if interest rates, for instance, get to Treasury bills get to 25, 26%, and I say to myself, between holding Treasury bills for 1 year at 26% or investing in the dollar, which some people are doing, which one do I think will give me better returns? Then you see people leaving the USD and moving more to Naira, and also start to see foreign investors a bit more interested in coming back into the country, because actually they go where they can smell money, and you're going to see higher returns coming in for them also. So I think all of this will be good for the currency in the short to medium term. And yes, other sectors might struggle, but if they do that alongside their tight regulatory environment, they talk about improved transparency, which is something we haven't seen in the central bank in years. Well, we know that that's one of the things that the current central bank governor is trying to push and trying to address, improve transparency. Then we start to see a lot more confidence building up. I think we need to look for a way to rebuild confidence in the economy, confidence in the central bank,
right,
and whose minds away from dollars. Everybody puts dollars. The market woman on the streets, the drivers, the gate men, everybody talks about dollar rates. Let's stabilize the currency and take people's minds away from there, and then you start to see an appreciation.
Right, you're absolutely right. Just talking about how everybody, talks, everyone, even on the streets, talking about the dollar, just obsessing and monitoring every move of the dollar. I wanted to take you back to that comment that the CBN, we have about 2 minutes left, so just rounding up your thoughts. The factors that are not under the control of the CBN, non-monetary factors driving inflation, where he talked about the oil and gas sector and the agriculture sector. Of course, the need to allow the farmers to get back to the farms and just ease that pressure in the food producing belt of the country. What are your thoughts in working closely with the fiscal authorities?
Yeah, sure. That's policy realignment, as I will call it. I think that works, but those productivity gains are not going to come overnight. Unfortunately, we are going to the planting season. So the short-term measures required, in my view, is that we need to import some food right now, on food items, maize, rice, and all of these things, to bring down the prices initially and allow the farmers to plant, of course, fertilizer and other things to plant, so that we don't lose the planting season, but also we will then reap from the harvest as they come along. I think that's what he's talking about, but those are fiscal issues. Right now, monetary issues are simple: interest rates, exchange rate management, and money supply aggregates.
Right. Nnamdi, closing thoughts from you as we round up?
Well, I mean, yes, definitely one thing we need to do is to try and push, if we're looking at the agricultural side, is to try and push exports. I think that's a major thing that we need to do. If you want to help with food inflation, that perspective, so not only push exports, but start to look for ways to increase production all across in Nigeria, across different agricultural products. So, definitely, I agree
Absolutely.
with that.
Well, thank you so much for your time today, and of course your contribution to our special broadcast today. Well, that's all for today's coverage of Nigeria's MPC meeting. A big thank you to my guests today, Bismarck Rewane, CEO of Financial Derivatives, and Nnamdi Nwizu, co-managing partner at Comercio Partners.